All right, let's dive into something that might not sound super exciting right off the bat, but I promise it's got some serious potential. We're talking about maximizing your charitable giving and minimizing those taxes.
It sounds like a win-win to me.
Right. We're digging into this article about year-end giving strategies and making the most of those tax benefits. We're on a mission to uncover some seriously smart tips to make your giving more impactful and, hey, maybe even save you a little money along the way.
I love it. It's fascinating how we often separate giving and taxes in our minds, but there's such a cool opportunity to make them work together, you know?
Absolutely. Okay, let's start with the basics. Cash donations. Easy, straightforward, they make a difference right away. But I'm guessing there's more to it.
You bet there is.
Yeah.
Cash donations to those qualified charities, you can deduct them, but you got to itemize those deductions instead of taking the standard deduction.
Mm.
So basically, you're listing out all your eligible expenses, including all those charitable contributions, to lower your taxable income.
So it's like choosing your own adventure standard deduction or itemized. How do you know which way to go?
Well, that's where strategy comes in. For most people, cash donations to public charities are deductible up to 60% of your AGI, your adjusted gross income.
Okay, AGI. Got it.
But here's a pro tip. Think about your giving throughout the year. If you think you might go over that 60% limit, think about spreading those donations out. You don't lose that extra deduction. You can carry it forward for up to 5 years.
Wait, so if I donate, say, 70% of my AGI this year, I can use the extra 10% next year. It's like a charitable piggy bank.
Exactly. And that's just the start when it comes to tax-savvy giving. Let's say you've got assets like stocks or real estate that have gone up in value. There's a way to turn those gains into even more giving power.
Okay, now you've got my attention. How does that work?
Donating appreciated assets like stocks or real estate comes with, I like to call it, double tax benefits. First, you totally avoid paying capital gains tax on the increased value. That alone can save you a good chunk of change, potentially up to 20% depending on your tax bracket. But it gets better. You also get to deduct the full fair market value of the asset on your taxes if you've owned it for more than a year.
So instead of selling the stock, paying the taxes, and then donating what's left, I donate the stock directly and enjoy those tax savings.
You got it. Let's say you bought a stock for $1,000 and it's now worth $5,000. If you sell it, you'll owe capital gains tax on that $4,000 profit. But if you donate it directly to a qualified charity, you skip that capital gains tax and deduct the full $5,000 market value on your taxes, like turning your stock gains into a super donation.
This is starting to feel like we're unlocking a secret level of giving. But what if I want to donate things like clothes or even a car? Can those come with tax benefits too?
Definitely. Even those everyday items can make a huge impact. But there are a couple things to remember. First, those donations have to go to qualified charitable organizations, those with 501c3. Giving to a friend, while kind, won't get you a tax deduction.
So it has to be official. What else?
You'll need to figure out the fair market value of the items. Think about what someone would pay for them now in their current condition. This is especially important for bigger things like cars might need extra documentation or have to meet specific requirements.
Got it. Fair market value, not the original price. Any limits on how much I can deduct?
There are. Non-cash donations are generally limited to 30% of your AGI if you're giving to public charities. Some foundations, that limit drops to 20%.
Okay, limits are important to know. Have you ever seen a really unique donation? Just curious.
One that stands out is a client who had a seriously valuable stamp collection, a family heirloom worth a lot of thousands. They donated it to a museum, worked with an appraiser, and the charity to get everything documented properly. Ended up with a hefty tax deduction, and the collection found a great home.
That's awesome. Shows how even something like a stamp collection can make a difference. And it has tax implications. It's all about knowing the rules. Let's switch gears to something called Qualified Charitable Distributions, QCDs.
QCDs are a great option, especially for those 70 and a half or older. They let you make tax-free donations straight from your IRA.
Did you say tax-free? Tell me more.
With a QCD, the donation isn't counted as income for you, so it directly lowers your taxable income. It can be especially helpful if you're taking the standard deduction instead of itemizing.
So even if I'm not itemizing, I can still benefit.
You got it. And here's a bonus. QCDs can count towards your required minimum distributions, RMDs, from your IRA if you're 73 or older. So you're making a donation and fulfilling that withdrawal requirement. And since the QCD isn't counted as income, you could save on taxes you would have owed on that RMD.
Okay, QCDs are going on my list to look into. But what if I'm not 70 and a half yet and want more flexibility with my giving?
That's where donor-advised funds, or DAFs, come in. Think of them as a charitable giving savings account. You contribute, get an immediate tax deduction, and then recommend grants to your favorite charities later on.
So it's a hub for my philanthropy. I like it. How does it work, though?
You contribute money or assets to the DAF. You get the immediate tax deduction based on the value of your contribution. The money in your DAF can potentially grow over time through investments, and you decide when and how to grant those funds to the charities you choose.
Not just about giving, but potentially growing those funds for even greater impact. That's smart.
DAFs are especially powerful when you donate appreciated assets. You maximize your tax savings by getting the deduction and avoiding those capital gains taxes.
Can you give me an example of that in real life?
Imagine you have a really good year, income-wise. You know you'll be in a higher tax bracket. You have stock that's gone up, and you're thinking about selling. Instead of selling and facing a big capital gains tax bill, you could donate that stock to a DAF. You get a deduction for the full market value of the stock, which reduces your taxable income for that high-earning year, and then you recommend grants from your DAF over time.
Genius. DAFs. They're not just for the super wealthy. They're for anyone who wants to be a strategic giver. We talked about itemized deductions earlier. With the standard deduction higher these days, is itemizing a thing of the past?
Not necessarily. There's a strategy called bunching that can help. It's about grouping several years' worth of donations into one tax year to boost your itemized deductions for that year.
So a super donation to push you over that standard deduction.
Exactly. Like, let's say you typically donate $5,000 a year, but the standard deduction is $13,850. If you spread it out, you might not reach that threshold to make itemizing worth it.
But if I bunch 2 or 3 years worth of donations together, I could exceed the standard deduction and get those benefits for that year.
You got it. Now, I know what you might be thinking, will this leave gaps in my giving other years? Valid point. But remember, those donor-advised funds, they're a perfect fit with bunching.
Ah, I see where you're going with this. I could bunch my donations, put that lump sum into a DAF, get the deduction, and then make grants from the DAF over the next few years.
Exactly. You maintain consistent giving and get the most out of your tax benefits. And remember, that money in your DAF can potentially grow through investments, meaning your giving power could actually increase.
Double win for the charities. They get consistent funding, plus the potential for more support later on. Have you seen this in action?
Absolutely. One client comes to mind, a retired couple. They wanted to make a big donation to their alma mater, but their annual giving didn't exceed the standard deduction. They decided to bunch 3 years' worth of giving into a DAF so they could itemize that year and get the full tax benefit. Then they set up a schedule to make grants from the DAF to the university over the next 3 years, ensuring that consistent support.
That's brilliant. Shows how bunching can be tailored to different goals. It's not just giving more, it's giving smarter. But are there any downsides to using a DAF?
That's a good question. DAFs offer tons of flexibility and tax advantages, but remember, once you contribute funds to a DAF, they are dedicated to charitable purposes. You can't take the money back for personal use.
Makes sense. It ensures those funds support good causes. What about fees? Do DAFs charge fees to manage the funds?
Most do. They can vary depending on the provider and the size of your fund. It's something to think about when you're choosing a DAF provider. Weigh those fees against those potential tax benefits and investment growth.
Okay, it's about finding the right balance and doing your research. This is so helpful.
Remember, these strategies aren't one size fits all. What works for one person might not work for another. It's crucial to talk to a tax advisor or financial planner who can look at your specific situation and help you develop a plan that's both generous and strategic.
Such a good reminder. Don't just take our word for it. Get expert advice. Okay, we've covered a lot today, from those initial cash donations all the way to setting up DAFs and bunching. Feels like we've unlocked some seriously powerful giving strategies.
You've definitely laid the foundation. But the real magic is connecting these strategies to the why behind our generosity.
I love that. Shifting from the how to the why. And that's exactly where we're heading next time. Stay tuned as we explore what fuels our desire to give and how these strategies can help us make an even bigger difference. Welcome back to our deep dive. Last time we talked about some pretty smart strategies to maximize your charitable impact and keep those taxes in check.
Yeah, we covered cash donations, appreciated assets, QCDs, even donating things like clothes and cars.
We even touched on this idea of bunching. It sounds like a really powerful way to make your generosity count, especially with the higher standard deduction these days.
You're right, bunching is all about timing. Remember how we talked about the standard deduction, sometimes making it less appealing to itemize?
Right.
Well, bunching can help with that.
So instead of spreading my donations over a few years, I'd basically bundle them into 1 year to exceed the standard deduction threshold.
Exactly. Let's say you typically donate $5,000 every year, but the standard deduction is $13,850 for single filers. If you spread that out, you might not hit the threshold to make itemizing worth it.
But if I bunch 2 or 3 years worth together, I could potentially get over that standard deduction.
Right. Now, I know what you might be thinking. Won't this create gaps in my giving in those other years?
Yeah, that's a good point.
But remember those donor-advised funds we talked about? They're perfect for bunching.
Ah, I see where you're going. I could bunch my donations, put that big chunk of money into a DAF, get the deduction, and then make grants from the DAF over the following years.
You got it. You keep giving consistently and get the most out of those tax benefits. And don't forget, the money in your DAF could grow over time, so your giving power could actually increase.
It's like a win-win for those charities. Have you seen this strategy play out in real life?
Oh, absolutely. I had a client, a retired couple, who wanted to make a big donation to their alma mater, but their annual giving was less than the standard deduction.
Makes sense.
They bunched 3 years' worth of giving into a DAF, so they itemized that year and got the full tax benefit. Then they set up a schedule to make grants from the DAF to the university over 3 years to keep that support going.
Such a smart move. It really shows how bunching can be tailored for different goals. It's not just about giving more, it's about giving smarter. Are there any downsides to using a DAF, though?
Great question. DAFs are flexible and have tax advantages, but once you contribute the funds to a DAF, you can't take the money back. It's dedicated to charity.
Okay, that makes sense. It ensures those funds go to the right place. What about fees? Do DAFs charge fees to manage the funds?
They usually do. Fees depend on the provider and how much money is in your fund. Definitely something to consider when you're choosing a DAF provider. Think about those fees, the potential tax benefits, and any potential investment growth.
So it's all about finding the right balance.
Right. And these strategies, they're not a one-size-fits-all thing. What works for you might not work for someone else. It's so important to talk to a tax advisor or a financial planner. They can look at your situation and help you create a plan.
Such a good point. Get that expert advice. We've covered so much cash donations, DAFs, bunching. We've uncovered some really valuable giving strategies.
Definitely laid the groundwork. But the real magic is connecting these strategies to the why behind our giving.
Love the why. That's exactly where we're going next. Stay tuned as we explore what motivates us to give and how these strategies can help us make a real difference. Welcome back.
We've covered so much, right?
We have. From those simple cash donations to setting up those donor-advised funds and bunching those contributions.
Right. But now we're going to shift gears a bit.
Okay.
We've explored all the how-tos, those practical strategies, maximizing your giving, getting those tax benefits.
Right.
But now, it's time to talk about the why. You know, the heart of what drives us to give.
I love that.
I'm curious, what causes are you most passionate about? What kind of impact do you want to make?
Those are big questions. It's easy to get caught up in the details of tax deductions and, the finances, but giving is about so much more than that.
Absolutely. It's about connecting with a cause, something that really resonates with you, and using what you have to make a difference.
For sure. Whether it's supporting education or fighting hunger, advocating for social justice, or, protecting the environment, it's about putting your money where your heart is, right?
Yeah.
Making the changes you want to see.
Exactly. Tax benefits, they're a great bonus, but they shouldn't be the only reason you give.
Right. It's got to come from a genuine place, caring about others, wanting to make things better.
It's about finding that perfect spot where your heart and your head are on the same page, where your passion meets your purpose.
I love that. Make giving a joyful experience, not just a chore on your tax return.
Exactly. So as we wrap up this deep dive, I really want to encourage you to take a minute and just think. What matters most to you? What gets you fired up?
Yes. Think about what kind of legacy you want to leave behind. What impact do you want to have?
Once you've found that spark, that thing that really drives your giving, then you can use those tax-savvy strategies we talked about to amplify it, make an even bigger difference.
I love that. It's about making giving part of who you are, not just something you do once a year.
It is. Recognizing that every little bit counts. Every act of giving can make a difference.
Absolutely. It can inspire other people, help communities, and ultimately, contribute to a better world.
It's true. So go out there and give.
Give from the heart.
And use what you've learned today to really maximize your impact.
Don't underestimate the power of your generosity to change the world.
Thanks for joining us today.
We hope you found this deep dive insightful, helpful and empowering. Remember, you really can make a difference, and we're here to support you every step of the way.